All right, good morning, everyone. Hope everybody is doing well. Thanks for being with us today. Today is Wednesday, July 1st, 2026, and this is the audio edition to the PTG Daily Trade Strategy Briefing. Today we are broadcasting in both the Polaris Trading Group trading room as well as the Pit Funders trading room. So welcome to everybody. Hopefully the broadcast goes smoothly. Before we get underway officially, the regulators require us to show the disclaimers regarding trading and specifically the NFA compliance rule 2-29C subparagraph 1. You're all familiar with the risks associated with trading. Past performance is not indicative of future results. And the trades that you will be seeing on our screens are in simulated mode. We do trade live accounts, but for demonstration purposes, we are displaying simulated accounts, but they are with live data, so everything that you do see is representative of a live trading account, though in simulated mode. If you do have any questions throughout the entire broadcast, feel free to post. I'll get to them timely. My slot here now with the new format, you can expect Wednesday mornings for Polaris Trading Group. And as you are perhaps aware, we've made some modifications to the scheduling where everybody will have an opportunity to experience different traders within our orbit, within our universe. And hopefully that will offer you some diversification in terms of styles and help you with your own trading. It's always good to have some diversity. How does this person do it? How does that person do it? And then of course you can always settle in on who you prefer. You know, every day or every week we'll have again different moderators, right, with different styles and so forth. And so you can kind of zone in on who you want. Certainly tune in every day. We'd like you to do that, of course, right, to be part of the overall community. And again, my slide here will be today, all right, on Wednesday. So let's rock and roll, get going with it. So, of course, end of quarter yesterday, big rebalance this past Friday. And then we had the JP Morgan collar, which is once a quarter, that hit yesterday. So I'm not going to really talk too much about that, but those are the kind of the end of quarter, end of month fundamentals that that went on. Of course, this is a shortened week with the 4th of July holiday, so Friday will be closed. I do anticipate probably today, tomorrow, again, most of the big decision makers are probably going to be having today, tomorrow off, get that long weekend, really long weekend under their belt, right? As the saying goes, right, here in the United States, on these holidays, everybody's going out to the Hamptons, out on the tip of Long Island. I don't know whether that's true anymore, because the market has, everybody has really, all the traders and decision makers have been dispersed in various parts of the country, down in the Texas area, down in Florida, certainly continued up here in the Northeast, but everybody has dispersed. So I'm sure, the whole phrase of going out to the Hamptons early is more kind of symbolic than anything else at this stage. But in any event, so coming into today, all right, we ended up actually yesterday in terms of our 3-day cycle, and I know many of you are now uh, monitoring the 3-day cycle. We finished off with a very, very strong cycle, and today begins a brand new one, cycle day one. So typically the expectation for cycle day one is some magnitude of a decline, and the goal of a cycle day one is to establish a low reference in order for the market to begin its next phase of rally. So we've had a nice move up here, right? As we can tell. I mean, let me just go back to the bigger picture here, the multi-time frame chart for a moment, right? So here's the daily on the left. I mean, again, contextually, we're in this uptrend or up move swing condition right now, but contextually, we're still really pretty much kind of in this triangle consolidation phase. This is on a daily chart, right? So just kind of getting the broader picture, right? So we are reaching over the next probably several days. We're going to be reaching this kind of apex area, right, of this triangle. So what would be some sort of an expectation would be some sort of a breakout, perhaps to the upside, not necessarily today, right? Just more of a bigger picture stuff, or a break, somewhere to the downside, right? That's typically what you're looking for on some of these triangle type patterns. All right. Doesn't appear to have. I mean, anything can happen at any time. Certainly. I don't think we're necessarily expecting a breakout type scenario today. Right. And again, given going into the holiday period here as well. So I'm kind of looking for some initial downside pressure, but more somewhat from a neutral standpoint, since we're kind of in that, beginning this holiday season. Taking a look at the 3-day cycle uh, template that we have, I got the ES here on the right and the NQ on the left. Now, if you're an NQ trader, most everything that we talk about with the ES can be easily converted over to the NQ, right? Because the market obviously is highly correlated. So anything really happens in the ES, you're going to see similar in the NQ. But at times, though, you will see some divergent activity, right? So we always, even if you're not trading the NQ, and I don't actively trade the NQ myself, I do monitor it very closely. Obviously, within the NQ, the XLK, right, the technology sector comprises, I believe it's 38.2 now percent of the S&P 500, right? So as the saying goes, so goes Nasdaq, so goes the market, right? Very much applies. So we got to pay attention to it, even though we are perhaps just trading the ES, so something that kind of intermarket or intra-market um, references, right? I mean, we also look at our advanced decline ratios and the various sector weightings and so forth, right? But to make it kind of a simple approach, just monitor Nasdaq as well. You can see here this morning, you can see some weakness in the Nasdaq right now relative to some firmament with the ES, right? So what I look at this kind of relationship, I'm anticipating more of a balancing type two-way trade, right? The strongest moves tend to come when both NQ and ES are firmly aligned. When one's going one way, kind of pressured one way, and the other one's kind of working its way to the other side, right? As it appears here this morning, the expectation is a little bit more kind of that tug of war type of play. All right, so beginning the day, that's what we would be anticipating. In terms of profile activity, another kind of thing that we look at is how is the um, volume profile setting up, and that can give us some clue as to potential direction influence. So you can see here during the overnight on the ES, pretty well balanced here, kind of a delta shaped or D-shaped profile. In terms of the NQ over here, a bit more, it is delta shaped, right? But a bit more, I kind of refer to this as more boxy type of play, all right, in terms of patterns. So I got a little bit of a push and pull here, all right. We'll see how the resolution fares, as the RTH session gets underway. And then in terms of the other parts of my chart here that you'll see is the 5-day rolling profile on the far right. So that's a composite profile. So we can see all the various high and low volume nodes that we typically will use, right? And you'll notice here in kind of these consolidation zones, okay, you're going to typically see large volume activity on profiles. When we get a breakout type of scenario, right, we tend to get these low volume nodes. All right, so these are markers, and then what happens is when the market comes back down and retests the breakout point, right, typically you'll get a response in these low volume areas, right? So you can see here in the overnight, got a little bit of a response here in the ES overnight. So these are some of the things that we use as our tools to outline, the broader, activity, right, between intraday and multi-day composite activity. So you'll see that. I'll reference that, quite often throughout the session. Various formations there. All right. So just kind of give you a little bit of a lay of the land. All right, on this, and again, this is our 3-day cycle template. And on the 3-day cycle, you'll see various levels and targets. We'll go over those as time permits, right? So these are all part of our what we'd be looking for in terms of targets and such. All right. So again, today we're being a cycle day one. We're expecting the expectation will be some magnitude of decline, and currently we do have that. All right. So again, that's measured from the close of the prior session. And as you can see here, we do have a decline from yesterday's session. So in terms of the fulfillment of a decline expectation, it has been, again, it's what we call a normal cycle day one, right? Now, again, this is not the final cycle day one low, but again, the premise on a cycle day one, right, is to find what we refer to as a secure low, right? It is the current low here at 75.10. It's not necessarily the final low for the day, clearly, right? So it's very early to tell. Yeah, so to determine, the question is the measurement from the cycle day 3 high. So the cycle day 3 high, right, is the starting point for measuring average declines, okay, on a cycle day 1. In terms of whether the decline has occurred or not, right, it's basically from the close of cycle day 3, right? So we do have a decline. Everything is quote unquote normal at this stage, right? So drilling back down into our main chart, again, what you'll see here, just give you a quick lay of the land. Again, 60-minute chart over here. Got a lot of levels and so forth. We'll kind of run through those as the day unfolds, all right? But this is kind of our work, larger time frame work chart, right? I typically kind of put this over here to the left, right, because we don't really need to, look at that every moment. And then the other parts of what you'll see here is we use our execution chart is our 750 tick chart. So you can use whatever you want. I mean, we also have 5-minute charts that we look at, 30-minute charts, etc. And again, we'll reference those as the day unfolds, as the morning unfolds here. But primarily what you'll see is our execution chart and the various signals. And again, we'll describe what is going on with the various trades at the time in real time. All right, that's kind of the quick lay of the land. As you can see right now, the beginning, we're going to kind of more of a neutral opening here, but we'll see how the market unfolds for us. Okay, that's the skinny on the mini. All right, and let's see how everything unfolds for us. So again, we'll wait for our 5-minute opening range. It kind of helps establish what the kind of rhythm and the tempo is expected to be. Right now, we're going to start the day somewhat with a neutral kind of lean at the moment. All right, so let me know if you have any questions. Just gonna step away just for 2 minutes, and then I'll be right back. All right, a little bit faster than 2 minutes there, but we're good to go. Back with you. So also on the platform here, you want to make sure if you want to zoom in, right, to any of the charts here. Again, we got a number of charts listed here. So if you want to zoom in, be sure to use your scroll mouse, right, where you can zoom in, all right, to get a little bit more detail. All right. Now, trying to just giving you an outline of how we approach and what we look for. We look for specific patterns, specific signals. We're perhaps a bit more of a rule-based, meaning kind of more of a kind of a mechanical approach, right? To just strict discretionary trading, which is certainly fine for many. Again, our goal has always been, has been, and forever will be staying in alignment with the dominant force, whichever that may be, kind of the lean, if you will. All right. So you can see right now, even though I state we have kind of a neutral beginning, we still have a little bit more of a downward lean that would begin to unfold. Okay, at the moment. Uh, so this stage again, we will be looking for potential bounces that stall. All right, but right now we have a bit more lean to the downside. In terms of our targets that we have, be sure to check out the link for the daily trade strategy. Okay, it's listed there for you guys in the pit room, and everybody in our own membership here at PTG has access to that. And some of the initial downside targets for the ES, what we call the bear case. I'll post them up here for everybody. Right down to the 75 15s. Right, so those are now have been fulfilled. Again, this is all the daily trade strategy is published each evening at 9 o'clock for the next day. So we have a number of folks that trade the European session, Asia European session. So pretty much everybody's well prepared in advance during those time sessions. All right, so now since the 15s have been fulfilled, we still got further downside to go. And next we would be probably anticipating 74.95. So I don't have a trade on at the moment because it has not fulfilled our or met our expectations for a particular trade. So we'll just continue to monitor the situation. Right. Manny posted his blueprint, market blueprint. which is very excellent. So, guys, if you're very much interested in Manny's blueprint, all right, be sure to check out that. I think he's posting it now over on Substack, and I believe it's a nominal fee or something like that. So be sure to check that out. It's very, very good stuff, right? If you like Manny's blueprint, and again, learn more about the clock, right? I think Manny's going to be putting some stuff out in the near future regarding the clock, some educational pieces and so forth. So be sure to check that stuff out as well. Right. Libby asks regarding the 3-day cycle, cycle day one, the high, not the close, right? So again, the measurement of the average decline targets on cycle day one is measured from the cycle day three high. Okay, so that's the core measurement in terms of range projections. In terms of whether or not the market is adhering to a decline, which is typically expected on a cycle day one, that's measured simply from the close. Are we above or below the prior close? Right. So one is for measurement, one is just determined whether or not we have a decline underway, which is normally what we would be expecting. Does that make sense, Libby? Right. All right. Good. Super. All right. All right. In terms of levels that we would be looking for at this point, all right, on bounces, again, the A10 up here in the top left. Let me get my pen. I think I lost my pen. Reset my pen here for a second. Okay. Again, in the top window in the middle, you'll see this red area here, this red line, right? That's what we refer to as the A10, and that would be this would be a sell area up here from that structural level. Okay, and we got an automated staged order here to sell. This is what we call our premium conditions. So if the market wants to go low, we get triggered in. So that just triggered into an auto short. We'll see if that plays out for us. They don't always, but that's okay. This is a kind of a key area here as well as, you know, the 05s to the 15s. So we'll have to see if the market kind of accepts this area or not. Obviously, acceptance will be staying in this area and moving higher. Rejection will be not staying in here too long and then progressing lower. So right now, the lean right now is to the down, and we'll see with the key area right here. So and if you take a look at the chart on the left, this is a 2-day high. I'm sorry, was it 2-day high? No, yes, no, prior high. Yeah, 2-day high. That's the 2-day high, that blue line there. So we're kind of testing that 05 2-day high. So buyers are, you know, again, the market's been in this, you know, buy the dip mode when it gets dislocated. So we'll see if this again happens again. We tend to want to stay with the directional lean. If this area is going to hold, all right, what we prefer to see is some sort of a move up and then a retest to hold, all right, this area for a long. Some of you, you know, maybe just entering at a specific level, which is fine. We tend to look for levels and zones to hold, and then a retest of them, a successful retest for a long play. so far being accepted. So we can get a move above the 15s and hold. That would be a bullish move. So you can see, as they pushed into here, buyers did step in. Didn't get any love on that quick minor premium. All right. Sometimes there's a lot of sitting and waiting. While we are, be sure to, if you have any inquiries. All right, so we got 15s here. Again, looking if it converts to the 15 back to the upside, that would be a good positive show. Right now, it's just a little bit of a bounce. Sellers are still engaging on the bounce. And this is our battle right now between the 15s and 05s. All right, so bulls responding right now. One thing in knowing where various levels are, or what we just refer to as reference points, right? There are many, many reference points uh, to reference throughout the day or over a several day period. Of course, one of those would be, the prior highs, lows, etc., or in this case here, the 2-day high. And why is that important? Why is that 2-day high important? You can see yesterday, all right, oh no, yeah, this was the 2-day high. So you can see yesterday where they challenged that early, okay, and then they finally, the bulls finally succeeded in breaking that out above that 2-day high, right? And so quite often when the market kind of the next kind of session comes down, it retests what we call the scene of the crime, SOC, right? The scene of the crime. So in many respects, you can kind of look at by looking at the bigger picture, right? We're always looking to say, well, where did price respond? What happened in these prior sessions? Because a lot of times the markets will come back and retest those areas to make sure they're either secure, buyers are still there, or sellers are still there, right? So a lot of times the kind of market in a way requires to kind of come back and retest areas of significance. And again, that breakout from the other day there, yesterday actually, breakout from the 2-day high, you can see the importance of that, right? You can also see the wicks here. We're kind of wicking on the bottoms. So what's happening there, price is pushing down, and then at the close of that time period, this is a 60-minute period, but at the close of those time periods, right, buyers regain control. So clearly, right, this move up, right, was met with, as the market pulled back during the overnight, buyers stepped in again. Buyers stepped in again, and once again now in RTH, once again buyers are stepping in. All right, so that's kind of part of the. I refer to that as shock absorbers, right? When you kind of think about that, right? So you got this move up, and then you got moves down, and it kind of pushes back up. Move down, pushes back up. Move down, pushes back up. So it's kind of the shock absorber effect, right? Now, all it is a shock absorber. We haven't gotten the shift yet, right? So we get now the lean this morning is down. So is this tradable coming off this area? Sure. If your plan calls for, I want to buy, that 2-day high or where that breakout point was yesterday on a test of it, that's certainly a valid trade. Right? If it's part of your trade plan. So again, I always, um, what I talk about generically is for everybody how you are running your trade plan individually. Again, I always make sure you trade your plan, right, specifically to your risk tolerances, etc. Just a general question: how many of you here in the pit room has or currently on any of the PITBULL Trader evaluations? Anybody in here in the pit room specifically? Have you guys taken any of the evaluations? If you haven't, you should at least give it a shot. All right, give it a go for July. See where you come of it. Again, you're going to be exposed to a number of different traders and styles. All right, so it may be worth your while to explore in a very managed risk basis. It's also good to experiment with various strategies as well without committing, a tremendous amount of capital. All right, so back to VWAP here. Again, up here at around the 29s, we'll be looking for a short play against the 810. And there's also a high volume node up in that area, the point of control, very near to that price. So, again, looking for a trade up in that area. Shalom says, on a funded account after evaluation pass. Super. Is that with the PITBULL or is that with another funder? Either way, congratulations. All right. Either way. Oh, with PITBULL. Super. All right. Even better. Excellent. All right. Very nice. Very nice. Take it slow and steady. That's all. Take it slow and steady. Right. Also, think about what got you to the funded stage. So what got you to the funded stage, right, is going to continue to work for you, right, in the funded stage. So what what you did in the eval, right? Yeah, what you did in the eval, right? Nothing changes. You know what happens is with a lot of folks, it seems, in my experience, is they view the evaluations as kind of rolling the dice. If I pass, I pass. If I don't, I don't, type of thing, right? That's again, not saying anybody has that particular attitude here, but as you're approaching this stuff, you really want to approach it, in a serious, you know, mindset. Okay, and then what got you there to the funded stage, all right, is just part of the gauntlet, right? Part of the challenge. Now to get you into the payout stage, okay, just keep doing the same thing, keep taking the same type of trades that got you there. Yeah, base hit, small size, right, learning to manage the loss, exactly, all that stuff. All right, very, very important. Right, and also when you're trading evals, you want to trade them in terms of your size, right? It's like what Charlene says here, base hits and small size. All right, um, I refer to it as small ball, right? You want to play small ball. You don't want to necessarily play big ball. You know, you want to play small ball. Small ball just means you're managing your risk. You're taking small trades. You want to be, using the baseball analogy. And again, Manny's a baseball coach. All right, so using the baseball analogy, right? You want as many at bats as possible. So you don't want necessarily. Remember, if you go big size, all right, you actually reduce the amount of cushion, all right, that you have in terms of stop losses and so forth, right? So when you go small size, you start off with ones, you add into another one, and so forth, okay, or take some off, re-enter, etc. What happens is you're able to weather, okay, adverse movement against you, all right. So you kind of play small ball. All right, we're short of 810 here. Let's see how this plays out for us. All right, let's see if the sellers do come back here around this high volume node, or if they want to just rip it up. Part of the patterns that what's been happening, and you've all experienced it, prices come down to a level and then they just rip them to the God's heaven. You know, it's like a one way street on many of these things. Charlene says one thing I learned from the group tip is after a stop out, set a timer for 15 minutes. Yeah, that's Manny. Manny has what's called his stop loss protocol. Okay, and so essentially that means after you've gotten stopped out and so forth, take a break, right? Sometimes the mental heat, frustration kind of sets in, right? And if that does happen, just you got to take, you just got to give yourself a short timeout. Nothing wrong with that. Yeah, I like Manny's stop loss protocol concept. So you just got to develop one for yourself. John South says the winds down. John South is in Chile or Chile. Um, you got strong winds down there, cutting off some electricity. Yeah, Renee's posting the stop loss protocol active. All right, hit a stop, Feeling it, stand up, right? Step completely away from the screen. No looking at prices or charts for a minimum of 10 minutes, right? You want to protect your capital. You want to protect your capital from you, right? I always say in our membership here that the market cannot hurt you, right? People complain about the market doing this and doing that. The market can't hurt you. Doesn't know who you are, doesn't know you're trading, okay? Doesn't care if you're there or not. Market cannot hurt you. It's all what you do to relation to what the market is providing us. So you need to step away. You know, you need to have control of over yourself. Market's just there. It's going to do what it needs to do in terms of supply and demand. If there's more demand, okay, it's going to go up. More supply, okay, it's going to go down. You know, we got to learn to recognize all that, and then when we work within the context of that, we have to be in control of what we're doing for ourselves. So yes, Renee is absolutely right. You got to protect yourself from yourself. I know it sounds strange, but it's so true. All right, Mr. Market, give us a little rotation now back to the downside. All right, give us some downside love here. Yeah, the 2-day high, sure. All right, just over here on the left, okay, E-mini super. All right, over here on the left, what I was talking about is, so when we were yesterday, in yesterday's session, right, that was the prior high. So now today is the 2-day high. Okay, and that's this blue line over here to the left that I'm pointing to. Okay, on the left chart. Okay. Uh, all right. So the idea there yesterday was the market was kind of chopping through that area. All right, and it finally broke out. Okay, so that's of course what happened. Right. So what I was saying this morning was many times the market likes to come back, right, to what we refer to as the scene of the crime. Scene of the crime for me is just a breakout. All right, is just a breakout. And so the idea there is on the retest this morning here, right down at this level here, we're looking for buyers to step back in. Right, that would have been the expectation, and of course, it did ultimately play out that way. All right, so that was just kind of the comments in terms of the 2-day high. So the idea there is you want to, you know, when you coming in the morning, you want to reference what are some of the key levels that we need to pay attention to. Right, so it's not about a prediction game. Unfortunately, we got stopped out on that. Just didn't get the rotation that we wanted. All right, buyers are still very much in control, but we're looking for those references that, you know, again, it's not, like I said, it's not a prediction game, but rather obviously a probability game. And the idea there is what areas and levels responded yesterday. What did the market do collectively yesterday that we need to pay attention to? All right, and then what we would essentially do is we're anticipating responses, okay, from those particular areas. So that would be, you know, certainly a level, right? doesn't always have to be the quote unquote 2-day high. It could be any reference, but we're looking for a reference, right, to work with, and then formulate some sort of an expectation of what may happen if prices return back to those levels. Okay, institutional buyers, institutional players, right? Uh, Again, if they're looking to buy them, they want to orchestrate a move down to a previous known area that had, fair amount of volume, so they can buy them again as cheaply as they possibly can. They orchestrate moves to levels, right? Why? Because they can. They have the clout. They have the firepower, right? They move prices all down. They clean out whatever sellers that are at those levels, and then they move things, back. Then they get reaggressive, right? So again, knowing where breakout points were, what happened, volume points, always important to note, because again, we're trying to just follow the big institutional players. That's who we're following. And so we got to kind of think about what they're more likely to do. Big institutional players, don't chase price because they can't get the liquidity that they need. All right. So cool. Good question. All right. So obviously we got stopped out on that. That 810 has been pretty a good performer for us, consistently. And today, just not today. It's not the day for the 810, at least so far. So one loss, one stop out is no big deal. Okay, particularly if you have a strategy that's been performing for you. Again, you got to just, a stop loss is just part of. It's just part of the process, right? It doesn't mean you did anything wrong, right? It just means that the market didn't respond at that level, right, or that structure today or at that moment. But it's one that's been, the 810 for us has been a very consistent performer. So the idea then is you don't know which trades ever are going to be, the winner or not, right? So what you can't do, and I'm saying what you cannot do, you cannot cherry pick. People cherry pick. I don't think, it doesn't look right. If you're a methodical trader running a strategy, whatever that is, you have to execute regardless of whether or not that trade looks right or not. As long as it adheres to all the criteria based upon your research and for that, then there's nothing left to think about what to do except for execute. So a lot of traders overthink things, and you just got to accept that. Hey, okay, I got a loss. BFD, big F and deal. All right, I got a loss. It stopped out. Okay, doesn't mean I did anything wrong. Didn't do anything wrong. Follow. As a matter of fact, you did everything right, correct, as expected. Executed at a particular strategy when the signal. So it didn't work. Okay, move on. Right. All right. All right. So now again, our goal here is to, obviously, stay aligned. So we did get the shift, and so we'll just have to, now just kind of stay in alignment in terms of, the long side at the moment on pullbacks. Okay, good. All right. All right. So we get a pullback down to 30-ish, 25s to the 30s in that zone. That would probably be potentially a good area for a pullback long. So something down in here, look for a move back up. That's kind of be the outline there at the moment, right? So we get this move up. Manny, what did you have on your blueprint this morning? I'm assuming you got something off of those 05s, 10 area. Here's something else also, again, while we're waiting for the next signal. All right, on our charts here, particularly on the right-hand side, all right, let me just kind of give you an idea. It's a continued lay of the land, so you have some familiarity with our charts here as you start seeing them, okay? So kind of just trying to explain kind of the outline, okay? I've already went over the left-hand chart. I'm going to go talk about the right-hand chart at this moment, okay? So you can focus your attention there. So it's a 750 tick chart, okay? 750 tick. Again, I've always gotten the question of why a 750 tick. I've used a 750 tick for like 20 years. All right, it's very similar in terms of a time chart. It's very similar to a 3-minute chart. All right, so there's close relationships there, but because it's a tick chart, right, it doesn't adhere to time, right? So, but there's some structural similarities. So if you like a 3-minute chart, or if you've never used a 750 tick chart, but you like a 3-minute chart, 3-minute chart works great, right? I have it on my other screen over here as well. So, so there's some similarities. The idea of a tick chart is a bit more sensitive, right? So that's why I kind of like the 750 tick. So just kind of keep that in mind, right? So what you're kind of seeing here, these lines that we have, right? So we have this yellow line over here, right? And this white line over here, okay? These are what we call, these are our ATR lines, average true range lines. We just refer to them as A's, right? So this would be an A4, okay? So an A4, so just as shorthand. It rolls off the tongue, a lot easier. But what happens is when you see the shift here, so you get these ATR shifts from this yellow to white, that is a structural shift, right? That's a structural price shift. That's a significant um, notice for us. Okay, so in other words, the downside pressure that came into this low, now the upside pressure is beginning to build. Obviously, it hasn't moved higher at that moment, but it's beginning to build. So the downside pressure has dissipated, upside pressure has begun. All right. So kind of think of it that way. All right. And what we refer to that is let me just post it up here. We got some text that I can put up on our screens. 1 second. All right, they're called stackers, right? S-T-A-C-K-E-R, stacker, right? And what you'll get is you'll get these textual signals, notices, okay, that a bull stacker, right, has formed. So obviously a bull stacker in this case, right, is a long or a buy structure development. Okay, so so again, many of our folks in our membership will take this signal, and if they were short from earlier, they're out. They're GTFO, right? They're totally out, and then they can either reverse direction or reverse their polarity, position polarity to long, all right, in order to look for a move higher. So that's kind of what you'll see many times here, right? And then also we use this ATR, okay, as a management tool. So there's two. It's a dual use signal. One is to identify structural shifts in price, right, and then provide an opportunity for getting aligned with either the long side or the short side. And then secondarily, once you're in the trade, and as you can see, as the price is moving now, we use it as a trailing stop trade management tool. So once we're in a trade, we don't essentially want to get out of that trade. We can scale out of a particular trade to get risk free, but we really want to hold on to some type of a long, in this case, a long position, right? If we got in earlier, and then hold it and use that as a management tool. Does that make sense to everybody? Right? So we want to use it as a management tool. So we just want to keep, again, it's going to trail price underneath by a distance of an average range, average true range, right? So we want to just kind of continue to stay along with it. And then when that finally shifts back, all right, that's the signal then that we can get stopped out, right? So again, our tools are designed to not only help you enter a trade, but they're designed to keep you in a trade for as long as whatever the move has in terms of potential. No thinking about it. There's no whether or not I should get out or should not get out. Right? If you're in a trade and it's working beautifully as it is, and directionally like it is here, you're just sitting there and you're saying, fine, I'm just going to hang on to the trade until there's another shift back to the downside. It really takes a lot of the guesswork out of whether or not you want to exit at a particular level or not. So these are all built into our software, and right now it's is running to the long side. Manny, what did you have where you set up one as far as the lower day? What was your oh, here we go. Thanks, Manny. Support by 7508, 7510. Okay, excellent. All right, I had as a lower target, all right, based upon a downside play, was down to the 15, so very near to your area there. And in terms of my targets, I don't refer to them as like 75.15 was a low target for me on our sheets. Once that target's fulfilled, okay, the expectation there is I don't really call it support or a buy zone for long. What I do is, again, members in our community will vouch this for me, is that once prices targets have been fulfilled, many times they act as reversal points or entries for a reversal. So it's down to 75.15. It went a little bit lower, and then a reclaim of 75.15s, okay, would be um, a signal for a potential long. So if somebody had a plan in terms of that, right, to enter that way. So that's kind of one of the ways we use our tools as well, right? But again, it's all part of the interpretation of the plan, right? So Manny specifically outlines, right, a buy zone if it gets there. Okay, so that kind of matched up closely with my target of a short target down to a zone, right? So, and it's just kind of how you interpret it, right? So if it gets there, I want to go long, or in my case, if it gets there and then overshoots and reclaims back above, then that could be a signal for an entry. So lots of different ways to interpret levels and so forth. Everybody has levels, right? Everybody has levels. It's how you use them what it comes down to. All right, in terms of the 810, if we get a pullback to around 39.50 or so, again, we'd be looking for a long in that area. That kind of matches up. If we get a deeper pullback there, that matches up to the developing value area high, where it kind of broke out from that point. So that would be a good, potentially good area for a buy response. So keep an eye out on around the 39s on this pullback. Just as note, our line in the sand today is 75.45. All right, so today's line in the sand 75.45. Again, pretty much right in that area, and that's 75.45 plus or minus 5. So we're really spot on in that line in the sand zone. So coming from below, all right, this would obviously target from below. Now the bulls, if they have the moxie, all right, kind of muscle through this area, and then if they can hold this area, if they can get that through and hold it, then there's further upside potential. Right? So this is the area that now needs to, this is your battle area at the moment. Again, pull back to about 39.40s, I think is still very much viable if we can get an opportunity to get that. All right, we have an A4 over here, as you can see, triggered. All right, triggered long. All right, so A4 triggered long. 48.75. So a little bit of a shallow pullback there, but it did trigger long. First target. And now I get a lot of questions on this, what the blue line is. All right, so there's your entry, first target. What's the blue line? That's a break-even line. Okay, so so as the market kind of pushes higher, so if what you'll see if we get this second target up here, this blue line here is going to move down. Watch. Gonna get a trigger right here. Come on, get us that. Don't make a fool of me. Come on, I want to show it. My goodness, you can't get a tick sometimes, right? Well, we'll have to wait. But the it just came. Look at this. Just missed it by, I guess, a tick. Let's see. We still should get some upside here before anything. But the idea here, that's a break-even point. All right. We call that theoretical average. What's your question, Ram? Is it because it's the first touch of the A4? In terms of the long, yeah, it's first touch of the A4. Yep. All right. Never touched down here, so this is the first touch of the A4. Now it's not a discount, but it's still the first touch of the A4. Still valid. But I want to show you if we get this second target, that blue line is going to move lower. So what do we need? 53.5? A few summers ago when the market was really kind of dead, we'd be saying, my kingdom for a tick. That's not the case recently, but you can see it gets right up to the target and they're like, I just need one tick to get that second target. Why didn't you give it to me? We should get it. Nine contracts traded at 53.50. Nine. All right, just hang tight. Still anticipating to get the second target. There is some good two-sided trade here. How many of you in the pit room use order flow? when some of us in the PTG community, we also use order flow. So I do use order flow over here on the left. This is a 5-minute order flow. Goodness, give me that tick. There we go. All right, we did get the second target. Now notice what happened. All right, that blue line, all right, was up here, and notice it declined. Well, what does that mean when that happens? Because we sold second lot, second unit. Okay, your average cost of the remaining position, which is two contracts, one contract. So the average cost of the theoretical cost of the position right now, all right, is now like a total break even. All right, that's your break even line. All right. Now, why do I have that there? I put it there because it's an easy. It calculates it automatically what your break even point of your entire position is. Right, which is to me is a very useful, tool. Right. So if I know where the break even point is, then I know at this point, even with my stop where it is, just underneath the pivot, I'm not going to lose a cent on this trade. Right. So sometimes, you just want to know where that final break even point is. And so the more profit you take out, the more take profit you extract, okay, your average cost of the remaining position moves away, moves lower. Even though I paid higher here, the average cost now actually is calculated as a lower price point. So that's why I use that. It's a nice, easy calculation automatically. Now, I can either leave the stop where it is, or some of you may want to bring it to break even entry. That's fine. I usually, if I'm going to do that, I usually wait for two scales. But really, for the most part, I just kind of leave it where the pivot needs to be, because that's where the structure point is. I mean, unless it breaks structure, unless it breaks that low pivot, you know. Anybody know what the low pivot represents? Let me stop the jiggling here. Anybody know what the actual low pivot point represents? Okay. Okay. All right. Anybody else? Philly D says support. Okay. We can talk about that in a second. Okay. Anybody else in the pit? I got some answers over here in the PTG room. How about anybody else in the pit? What does the low pivot point represent? Philly D says support. Okay, I'll accept that. Anything else? Any other ideas on how to describe it? Okay, so how I was taught years back in the investment banking days when I was market maker. Okay, in terms of the low pivot point, right? That's the point where what the last seller sold. Okay, that's the point where that price point is the last seller sold there. No sellers below that point. Now, it as Philly D says, he answered support, and yes, it is a support, but it's more technically though the point where the last seller sold. Okay, and then you can use that as the point from which now buyers had stepped in shortly after that, and then the market went higher. Okay, so pivot points to the upside or pivot points to the downside, it represents more accurately, okay, where the last buyer or seller sold, right? We did get trailed out on that, so and that is still again very nice positive trade. But how about up here, right? At this pivot point, that's where the last buyer bought. Okay, so no buyers above that level. So it's going to take new buyers, right, to push above there. Now, yes, were there sellers there? Was there supply there? Absolutely, and they got absorbed. The buyers got absorbed. All right, no question. Won't argue that point. But the point of it is that the buyers, there's no more buying above that level. So then you can use that as saying, okay, that's where that 54, okay, that's going to be key right now because that's where the last buyer bought. So now, could you play a short against that level on a bounce? Sure. Where would your stop be? It has to be above where the last buyer bought. How much? That's going to be your choice. A few ticks, a few points, okay? But the idea is, again, this is what I was taught when I was a market maker. That's where the last seller sold here, LSS, and then last BB, last buyer bought. Okay, that creates pivots. And then again, you can use those. So now look here, right? We got stopped out below the prior low. Why? Because there's somebody out there willing to sell lower than that prior low point. Okay. Now, whether or not this, continues deeper or not, obviously that's a question mark. But the point is that's where the last seller sold, and now somebody is willing to sell lower. So that is a break of some level of structure, right? So that kind of sets the tone here to some sort of a pullback mode. Whether or not the pullback mode now attracts buyers again, okay, is obviously a question mark. All right. So when we see that, and again, yes, it is support, but like here's the thing. It's support till it's not support, right? It's resistance till it's not resistance. But again, that's how I was taught when I was a lad back in the day. And I've carried that forward in education with our group as well. I think it's certainly a much more accurate, hey, that's where the last buyer bought, right at the high. Okay, I'm going to short against that until there's a new buyer above that, right? If you're long, right, off of that low pivot earlier, I don't want to see that low pivot broken because that tells me somebody is, obviously more willing to sell it lower. So then I don't want to be long if somebody's willing to sell it lower. So it's just, a lot of times it's interpretation of price action. And that's what we try to convey with our group. Of course, nobody knows what's going to happen next. All he just knows what happened, what has happened. But I can use that information right, to make more informed decisions. All right, guys, I'm going to just take a quick refreshment break, and I'll be back in about 3 or 4 minutes. All right, back with you. And just double check on the volume for everybody, if you will, on my return. Audio, 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 Bueller, Bueller, Bueller. We're okay? Okay, audio is good. Audio is good in pit. Audio is impeccable down in Chile, our Chilean office. Okay. think the pit room is good. All right, so we're right around our line in the sand here at the 45s. Okay, thank you, Renee. Okay, hanging out at the line in the sand zone. Two-way action up here. So at this point, probably get a little bit more consolidation type rhythm. Now again, interesting, kind of take a look there, right? Where we described the last buyer bought up here at the high. Look where they came back up and retested it and just got a quick rejection. So nobody really is interested in paying above that high level at the moment. And you can see over here in the order flow, right? Very, very, very little traded there. And it kind of, that's what you want to see. If you're looking for the market to stop and not break higher, okay, this is where order flow can kind of give you an insight, real time. Also, part of trading, you know, is what do I need to see or what am I looking for? Because you don't know if what you're looking for, how can you ever determine anything, right? If you have no idea what to be looking for. So again, in terms of a lot of the stuff that we do in our community is I try to give insights into kind of what to be looking for in advance. So if we're looking for the market, say in this instance, right, where we already described last buyer bought, no buyers above that level. If you're looking for the market to stall and not break out, what would you be looking for? Right? So, yes, not getting above that level, right? But, you know, again, looking at, say, order flow, I would want to see very, very small contract size, right? Right. Price action, order flow, Manny posts, right? So, price action, order flow. I would not want to see significant volume above that level. If it kind of gets to that level and kind of fizzles out a little bit, like it has, right, that's probably a good sign that okay, you know, Mark will probably kind of pull back a little bit here, right? If you are looking for a breakout, okay, then you're going to want to see more volume start building. Now we're starting to move above that level at the moment, right? And you're starting to see some volume pick up, but now you want to see a sustainability of that volume. It's not just enough to poke its nose above it, but we want sustainability, right? And you'll see here, right? Yeah, look at that, right? And I was just about to describe. A lot of times it'll poke its nose and reverse right back down. Is that a peekaboo? Is that a look above and fail? Possibly, you know, a few ticks, right? But certainly not enough that I want to be looking for a continuation long. Okay, so that's a failure, right? And you can clearly see it. But the point of it is, many people don't know what to be looking for. Again, when you're doing this, you're looking at it and, you know, what do I need to look for in real time to make that decision whether to take action or not in real time. So one of the decisions here could have been, hey, it poked its nose above and it came right back down quickly. And I'm looking at that order flow there and say, that's not much order flow, relatively speaking, right? So in real time, if you're looking for, say, a short play against that, you need to be looking at that real time and say, hey, that's a failure, it's reversing, boom, short them. You know, like this. You know, that's how quickly you have to react. But in order to do so, you need to know what to be looking for. It looks great after the fact, and we learn after the fact. But if you don't know what to be looking for in advance, again, you could be left, what's the saying? Left at the altar. So a lot of it's anticipation. We know that's where the last buyer bought before. Okay, somebody poked its nose ahead above and willing to pay a bit higher, not much, but a touch higher. But is it sustainable? And you see that it's not. As soon as you see that it's, they're reversing it, that would be the actionable point to take a short against that level. Right? Why? Because now there's a new higher high. Not much. There's a new higher high, but that's where that last buyer bought. Right? So now your stop goes above that high. But now what you do is you're having evidence. You're having evidence that the market now is reversing from that level. Make sense? Okay. So again, it's all about knowing what to be looking for. All right. That's kind of a little quick lesson of order flow read at a key level. In the meantime, while we have it here, we get an A10 trigger, long, first target out. Right, so there's a winner on that. And notice here, the blue line once again. No, it's not the blue line in hockey. Notice the blue line. There's your break-even line on the entire position. Okay, that's what I want to know. Where's my break-even point? Why is that important? Because I want to protect my capital. Protection of capital is critical. So I can take a trade, and should this get stopped out, hopefully it won't, but should this get stopped out, I've protected my capital. So as we take profit in hitting targets, and again, should we hit that second target, you're going to see that that blue line, okay, will move further lower. And then what I typically do when the second target gets fulfilled, I'll move the stop up to the pivot. Right now, I'm not going to do that. All right, but if we get triggered out on the take profit 2, all right, we'll do that. But right now, we're sitting break even. So that's a great position to be in. Yes, we always want to, make. But the key is you're a risk manager. So you got to manage your risk. So you got to being a risk manager. The best traders are the best risk managers. Okay, they live to trade for the next sequence. They protect their capital in the current sequence, take profit when they have it, manage it. All right, and there you go. All right, there it is. Let's kind of look at this, examine it. Now look what happens. Right, look where the blue line went. Yeah, let me stop this shaking again. Drives me nuts. All right, look where the blue line went. Remember, the blue line was where? Right, I haven't moved my stop yet. The blue line here was right here, where the stop level is. Now, since I took profit number, right, TP2, take profit 2, okay, because I took take profit 2 there, look where the break even line moves down to. Now, I don't want to ever let my trade now go that far to go break even. That's just poor management, all right, to do that. But you can see what happens here, right? So this is the idea about once you take profit, you know exactly where your break even is on your trade. Again, all this stuff is done automatically in our software, right? So now, right, I can move my stop really technically to break even. And there's actually now, so there's third target. Now look at this. Look at how far the blue line went even further. Right, so everybody understands how that works. Now again, that would be foolish for me to ever hold that, but you see that you know the idea of that. So knowing where your break-even point is. So now I have a runner. I got 3 scales, 3 take profits, okay, and now I have a runner. So I got a target way up here. I just moved my target, you know, my third target or fourth target rather, just way out of the line. Sometimes you'll get some monster runners, and you know you'll get those, but for the most part, all right. So now, what's the management of this? Okay. So now what I can do is I can bring my stop to break even or right at the pivot, or for that matter, I can bring it up a little bit above to this pivot. Right. So let's do that. So now I'm bringing it just above this low pivot here. Okay. That's where the last seller sold on that dip. No sellers below that point. So now I can manage it. So since I take profit up here already, all right, now what I really am looking to do is, you know, obviously take, if the market wants to move higher, right, continue to move that, right? But what I really don't want to do is I don't really, you know, I'll accept selling the last piece down here if necessary, okay? But I really, you know, obviously now I can hold it. Now I can sit there, relax, did my job, took the trade, scaled out, and there's nothing more to do but to manage it. There's no, you know, worries, anxieties, right? You've taken care of your mental state. Why? Because you followed your trade, right? Where are you at most risk? At what point in the trade are at maximum risk? Right? You're at maximum risk when you first enter the trade. If you're in your full position, all right? So if you're scaling into a position, you're not necessarily at your max risk, you're at a partial risk, but essentially just kind of view it from that standpoint. Okay, you're in at maximum risk when you first enter the trade. Question Stewart asks is what actually made that system go long at 40? Okay, so good question. This is our ATR system, our strategy. All right, so Stewart, these lines that you see, right? These are average true range lines. This is our own configuration using ATR. Now ATR is based on the chart size. All right, not, you know, the 10-day, you know, big daily ATR. All right, but it is an ATR based upon the chart that we're using. So these are called, we refer to these as structure lines. All right. So what made that trade go off? It touched it. It pulled back to it. So we're looking for that as a support point or a buy entry point. So I have the algorithm here, auto execution strategy set up. Okay. When it pulls back and touches it right there, it enters the trade. What have been the initial stop? Right now, I use a 10 handle stop, but you could have whatever stop size you want. I'm using about a 10 handle stop right now, 8 to 10 handles on that. And really, what we're looking for is exactly what happened here, right? Again, the market was in an up move. We get a pullback. We also refer to this as a discount, right? So DISC. right? OUNT, discount. We also refer to that as a discount. So here's I'll give you a little back history, right, about how I developed these ATRs. A little back history, a little storytelling. When I was market maker, okay, when I was market maker um, at the investment banks, management wanted to create some innovative ways to utilize our market making abilities with whatever's available in the current marketplace. What does that mean? So basically, what we did was we took a baseball cap. Literally, this is what happened. We took a baseball cap, took the little sticky notes, right? Those little yellow sticky notes, and we wrote various things on the sticky notes, right? Not love letters, love notes, but basically like MACD. Everybody knows what a MACD is, right? RSI, stochastic, moving averages, okay? Um, ATR, average true range, and I think there were a few others, all right, that somebody came up with. So the idea then, we shook up the hat, kind of crumpled them up, right? The pieces of paper, crumpled them up, put them in the hat, shake the hat up, and now you go, you go dip in the hat, right? Well, I dipped in the hat and I pulled ATR. Okay, great. Somebody else, and everybody had pulled the other pieces of paper. Okay, so short of the long story, we were assigned with taking the ATR. My group, I was in charge of a trading group. Um, my group take the ATR and develop some way to use it that can help us as market makers gain an edge. So somebody else that chose, say, MACD, RSI, etc. There was not really a time limit in terms of developing something, but the idea was to develop something. Okay, and so I'm going to move my stop up actually to this area right here, this first target. I'm just going to lock in that because the market's kind of waffling here a bit. Right. So the idea then to continue with this was we developed a system, a method to use the ATR as identifying areas, zones, to be able to, when the market's oscillating back and forth, as you see it that it does, that at what point has the market, kind of one of the questions was, at what point has the market pulled back where there would be an interest in buying it? So an example, using this example that we have on screen right now. So at what point in the pullback, in the overall price rhythm, has the market pulled back enough where buyers would enter? Okay, so we're looking for that. And the reason why we're looking for that is because as market makers, we're committing capital to the marketplace, right? In terms of liquidity capital. Make sense so far? Following, you tracking what I'm saying? So since we're committing capital literally at every price point, not at every price point do we want to commit the greatest amount of capital. There's obviously at some point we would want to commit more capital than at others, price points. So the idea of the ATR, the average true range, is we identified zones quite accurately, I might add. Right? We had some pretty smart people at the investment banks. Now this wasn't my total brainchild, but I had input along with it. along with a few others, right? So, but the core idea was, at what point would the firm be willing to commit more capital? And the idea of committing capital like that is attracting business, attracting institutional business, because it was a very competitive field, right? Where we're, all the tier one market makers, tier one is the highest tier, right? All the tier one market makers were competing for business from all the various institutional mutual funds and hedge funds and so forth. So we had to create some sort of an edge where we could manage our risk. Again, it's all about risk management, by the way. And same thing for each individual. It should be all about risk management, not about, yes, about profit, but really it's about risk management. Okay, so the core of it is, at what point, how much, where we can manage risk with the greatest amount of impact. So these ATRs became zones where, as market maker, we were committing greater amounts of capital, right, in the marketplace to attract business. Okay, so that's kind of the core premise of it. And what we found was, so for instance, price would come down to say this level here, the 40s. All right. So instead of just being, a normal bid for 500 contracts or 1,000 contracts. Okay, because as a market maker, yeah, I'll buy 500 contracts or 1,000 contracts anytime, anywhere. Gets to a certain level, such as an ATR that we identified. Now I'll buy 5,000 contracts. I'm willing to buy 5,000 contracts. And we actually did this in individual stocks as well. Right, so it wasn't just futures. I'm just kind of giving that example here, right? So we're willing to buy a much sizable quantity. And a lot of times what will happen is price will come down to those levels, okay? And we'll stand there and buy either contracts of futures, or we'll buy shares of stock that we're making markets in. And we'll sit there and buy and buy and buy and buy. So there were many times, like I traded Dell Computer, okay, during that time as well. And so price would come down to an ATR level such as what we're seeing on screen, but assume that's Dell Computer. And so I may stand there for the firm's book, right? For the market making book, I may stand there and buy 200,000 shares, okay? And so using firm capital, I'm just going to stand there. I'm going to support that level, buy whatever I can buy there. Once I've built up a certain amount of shares and the market starts reacting and start moving higher, I go out as a seller. Well, why would you go out as a seller? Because I'm trying to attract customer business. I'm not there just proprietary trading. I'm there to attract customer business. Okay, that's the whole premise of being market maker. So what would happen is, and we found out, was very near to those same levels that we had identified, institutional buyers, institutional players wanted also to buy at those levels. Now today they can kind of do it independently, but back then they had to go through the broker, the market maker, right? So the market starts moving higher, and I go, okay, I'm a seller of 500,000. Ram, if you're getting an echo, make sure you shut off both sides of all the rooms. Make sure you only have one version of my audio up. Okay, and so again, I'm trying to make this a shorter story, but it's hard to. Anyway, short of the long story is that the institutional players also wanted to trade at that level. So I would go out as a large seller. No sooner I went out as a large seller, I had like 3 or 4 buyers, institutional buyers, looking to buy what I had for sale. Okay, so the market starts moving higher. Okay, now I'm in a real good position, right? Because I'm already long from a particular level. Market starts moving higher, then I go out as a seller, and then now I attract buyers. not only do I attract buyers, now I capture those customers as buyers. So now I'm working not as a counter market maker, but now I'm working as an agent on their behalf. So then I get to control 3 different buyers. Does that make sense? Kind of see that, you see the idea of how that something like that unfolded. Okay, so the idea of these the ATR levels is they're structural levels that we developed and I carried forward here with what we do at Polaris Trading Group as key zones, right, to initiate trades from. Now, are they perfect? Are they 100%? No, of course not. Right? Not every zone is gonna be magic, but you'll see in the proper context, right? You'll see a trade such as this, right, unfold in real time. So I already know where I want to buy in advance. There's no question, right? When the market's up over here, right, and it starts moving down, I already know where I want to buy. Would that be useful to somebody, do you think? Knowing where to buy in advance and the reason why you want to buy them in a particular area? Now, then you can layer this with different tools that you may already have. But that's the basic premise to it, right, for that. All right, so what we're doing here now is I had moved my stop up, okay, and now we're continuing, market's continuing higher, right? So there's 2 ways now to look at this, all right, is I can just hold the position stock where it is, right? This position here will get stopped out when this ATR shifts. See when it goes like over here to the left where it shifted, right? So when that shifts, okay, that's when this position here will get stopped out. So I can just sit there, leave my stop, don't have to do a darn thing further, and just let the market, maybe the market wants to, go even higher, right? Now the thing about it is well, geez, I could have sold it up here. Yeah, you could if that's what you wanted to do, if that's your plan. And I say, execute your plan. But how do I know this current action, right, doesn't have more potential? So what we're basically doing here is on this last contract, I'm just letting it run, just letting it run. And it can, if it gets stopped out, I'm 100% accepting of that. Yeah, did I not get the high? Sure, but my goal is if the market wants to go higher, maybe it goes above this current high. So there's always a trade-off between, taking it, and most people end up taking trades much, much, much too early, where the trade has greater potential. So the question is, well, how do I manage that? How do you manage it? You have to have a method to manage it. You gotta have some sort of tool to manage it. So this is our tool, how we use it. And it's objective. It's not a subjective, I'm not worried, you know. Now the next prior high for this is where? 67.75, right? So that's where the last buyer bought yesterday, right? So over here on the left. So 67.75. So as it approaches there, what we can do, right? Again, given that that's kind of a key level, we could then, as part of management, we can move our stop tighter, tighten it up, right? So I could lock it in right now, but there's no reason to lock it in right now because the market hasn't shown any real weakness. It's pulled back a touch, but it hasn't really shown any real weakness, has it? So no. So now we just stay working with it. These are the kind of things that we teach. We have tools for, all right, and our members work with on a daily basis. If you recall earlier, we took a stop out on an 810 on the short side, right? And what did we say? No big deal. Here we got an 810 to the long side, and now we got a runner working on it. So the loss that we took, the stop out that we took on the short side is history. We've already covered that and then some. So that's what I'm saying in terms of the signals that we take. You got to keep taking, you know, you got to keep at bat, right? You know, so you swing and you struck out on a particular you know, at bat, right? Or trade. So you struck out. Come back in the rotation again later in the, you know, a few innings later, you're back up at bat. At that point, when you're up at bat, Manny, Manny can chime in on here anytime and talk about it because he's a baseball coach, right? You go, you strike out, okay, you don't feel good about it, you shake it off and you move on. Now you get to get another opportunity to at bat. So when you get up at bat the next time, what should you be thinking about? You should not be thinking about, I'll tell you what you should not be thinking about is the prior at bat. Make sense? Manny, jump in if you want. Talk about this. Right? You're the master. Join in if you want. Right? But okay. But at the next at bat, you should be thinking about that at bat. What pitch do you want? Etc. That's where you want to be focusing your attention on. So the same thing with trading. So you take, you know, you go up at bat or you take that trade, take the swing at it, right? And you strike out, meaning you got stopped out. Strike out, stop out, right? The analogy, the parallel is there. And what do you do the next trade? Do you carry the previous trade with you? Well, if you do, you're not probably going to do well on the next at bat, right? They teach you in baseball, right? Shake it off, move it off. You get it. You know, it's a fresh at bat. That next pitch could be the one that pulls you around the bases. That's the mental attitude that you really need. There's the resiliency that you really need to have, right? And again, what you don't want to do is you don't want to risk so much on an individual trade that you don't get any more at bats. And that's why I was saying earlier to start off the conversation when we first began, I was talking about playing small ball. Small ball doesn't mean that you chicken shit, all right? Doesn't mean that. It just means small ball means I'm small. I'm trading smaller size. Sure, I'm a big guy. I can trade more. I have the capital. It's not about that, right? It's about being able to have as many at bats as possible. And if you strike out on a particular at bat, right, i.e., getting stopped out, it doesn't hurt you, and you move into the next trade. You take the next at bat. I don't know if Manny's still in the room here, but if Manny wanted to jump in and talk more about that with how his coaching is all about, all right, that would be probably real great, kind of the parallels there. Not sure if Manny's still in the room. So anyways, that's kind of, you know, kind of a way to think about it. All right, we're up at the prior high. Now we do expect some sort of reaction here, you know, at the prior high. Now what I can do is, here's the thing that is, okay, so here's kind of the help within the management idea. So see, now we got a higher high here, right? And we have a higher low. Everybody see that? Okay, so what we'll do there, because of that, we're near to that high. Now I'm going to bring my stop up to that low pivot, right? So now I'm going to manage my trade with that. Again, objective, right? We get a higher high up here, near to the high, right? We get a higher low, but because we got a higher high, now I move my stop from down up here and move my stop. Now I'm just managing it, no stress. If it wants to come back down, now here at this point, whether the ATR gets stopped, shifts or not, I'm feel comfortable with this stop at roughly around the 58s. And that's how we do it. Okay, it is about 11:15. I'm gonna run uh, the session till about 11:45, about another half hour, and then at noontime, Danny with an I, Danielle, will be taking over and running her session on, I guess, minded markets. So stay tuned at noon, right, for Danny's session. We have some exciting things planned going forward with Danny with an I, that I think you'll be excited to participate in. And so we are working on a program. I won't spill the beans about it, but definitely is going to be very interesting and I think very useful for everybody. So stick around. Maybe she'll talk about it today. We're still in the development process of it. All right, at the prior high, again, we'll see if we can push above that. Now, what would be a good spot actually perhaps to take a trade out if it pushes a bit higher now, right, would be up at what we call the D level over here on the left. That'll be another conversation maybe next week to talk about what those are all about. But the D level up around the 79s could be a good spot if it gets there to take out the next trade. So maybe we do that. Let me just move this down. All right, to around the 89 area here. 89. Did I say 89? 79. I'm sorry. Bring it down about 79. So that corresponds to the D level, and that could be a good spot to take out this last trade if it wants to go there. All right, so just managing the long. That's all. Nothing more else to do. Not much of a response at the prior high, so buyers still pushing through. All right, so now what I'm going to do here is 67.75 is the prior high, and we're pushing above that. Now I'm going to use that as my stop. You see the 66 here right now on the ATR? I'm going to move my stop up to the 66 level. So now I'm really locking in essentially where the prior high was. Is, not was. Okay, so I'm locking in it there, and now I'm golden, right, to be able to hit the prior high. Now many people would say, "Oh, I'm going to take this. I'm going to take profit out at the prior high." Okay, Stuart asked, "So what was the profit on the longs?" I don't. Stuart, I don't keep I don't keep profit targets on the screen. Okay, but for purposes of the demonstration here, uh, in terms of like looking at P&L during the day, I'm very, very adamant that you should not be looking at P&L during the day at all. Look at it at the end of the day, okay? But for purposes of the demonstration, what I will do, right, is I will attach the chart trade, okay? So right now I have $700 booked, and I'm open on $1,700. Is that what you're looking for, Stuart? All right, so 700 booked on those earlier trades, and then I'm open on 1,700 right now on this, right? But again, I don't keep trades up or P&L rather up on the screen because I think it's detrimental to trading. I know I'm in a profitable position, right? I know I am, but I don't care to know exactly. I just know I'm in a profitable position because the reason for that is I want to stay focused on managing the trade, not, oh, I hit a certain price target or profit target and now I'm out because I can't stand to make any more. All right. Now I'm going to move my stop up to 69s, and again I'm above the high now, and I'm go either 69s or 79s. Right. So I can make an extra 500 bucks, or I stop out at 69s. And again, I'm just using the fact that the D level is a really important reference level for us. Right? It could still go past the D level, but I think that's a very good spot to take some profit out. All right. So that's how I view it. Doesn't mean it. If you want to look at your P&L every 5 minutes, certainly go right ahead. I don't think it's. I don't think there is. I don't think there's a good advantage to it. I honestly don't. I think it detracts you from focusing on the management of the trade. I know I'm in a profitable position. I'll find out at the end. So I don't have P&Ls up on my screens at all. When I was market maker, and I was running one of the groups, okay, at the investment bank where I worked, I had the management console, So I could see I had 6 traders underneath me that I was responsible for, and I had the management console, which showed the P&L for everybody. The individual traders on their desktops and the stocks that they were making markets in did not have a P&L. They were restricted from seeing their P&L. It wasn't my decision, it was management's decision, upper management's decision. Because I was a manager of a group, I had the management console. Why did they do that? Why couldn't, and as an individual trader, right, see their own P&L? And why did management, require that? Right, that's their mandate. It's because they want the trader to focus on trading, being a good trader, doing what's necessary, right? Trading those particular stocks, making markets in those particular stocks, not worrying about whether you're up or down. I mean, P&Ls in a market making book, guys. I mean, we're not talking about a few $100s. I mean, I could easily be up or down $150,000 in a heartbeat. You know, so you don't want to be thinking about your P&L because why? That affects, and we're all humans, right? I mean, it will affect us. So it's $150 or $150,000. It's going to affect people, right? So at the investment banks, again, they disallowed the individual traders to have P&Ls on their desktops. So even today for myself, okay, on my specific screens, right, I'm not really paying attention to the P&L. So that's something that I try to at least, again, the rationale as to why. But it's up to you. It all depends. Some people it affects them negatively, or they have a positive P&L going, and you know, however it affects you. All right, I'm going to move my stop up right to the pivot here, 71s. And again, if we hit 79s, then that will be it. But if you focus on the management of it, as we're doing, I mean, there's nothing more that can be done, right? You've done everything, you know, humanly possible. Looks like Manny scaled out of his trades up around the 70s, 75s. Looks like nice trade, Manny. All right, I'm gonna scoop my stop up a bit more, 73.50. Now I'm tightening it up, getting close to that 79, just kind of tightening things up a little bit, tightening up the ship. Also, what happens with the ATRs, by the way, when it finally reaches certain levels, the ATR will automatically tighten up. In other words, it will tighten up to the price. So it has a built-in or adjustment where it tightens it up. Right? And I'm happy with this 73.50 or 79, doesn't matter anymore. The job is done. Yep, the job is done. No emotions, just execution. In the meantime, I'm sitting there pulling hair out, biting my nails. At least I have here. Yeah. Next week. Oh, by the way, for those in the pit, by the way, right? I don't use a video camera, by the way. Okay, as you notice, I don't use a video camera. Um, it's just a personal preference. I know a lot of people, like to see everybody at their trading desk and so forth. I don't use a video camera. It's just it's just a pet peeve of mine, I guess. Right? So what Marlon's going to do is there will be a carousel where the website the webcam is. He'll have what's called a carousel, and so next week, hopefully, when he has a chance to do it, we'll put an avatar picture of myself. So if you want to see what I look like, but I'm not going to have a camera. I don't like video cameras in my office. So, but if you do want to see what I look like, right? There is a picture of me. There you go, with my aviator glasses, standing by my airplane. So that's what I look like. Handsome Harry. Videos is a bandwidth law. Oh yeah. There you go. All right. There's our stop out. Okay. Bingo. All right. There it is. Okay. There it is. I'll put a snapshot up on the screen. All right. There it is. And so Stuart, total P&L out of that, if you want to take a look, 22, 2337.50. All right. So out of that. And again, the lion's share of that, of course, right, was the runner. Now, what will be interesting to see at this point, right, is remember we took this out right at the ATR, right? So we tightened it up. The ATR tightened up, and so we've taken that out right at the 73.50s. Okay. So what will be interesting to see if price starts moving back down here, right? What we would potentially see now next is an ATR shift. So watch this. If this keeps going down, right? If this keeps going down, looks like a good out. Oh, you don't have a screen? Anybody else in the pit room lose their screen? Okay, all right. Oh, you have it? Okay, good. All right, so possibly a good out here, but what we may see is if this continues to go lower, you're going to see this ATR shift. Now we haven't seen it yet. Okay, good. We haven't seen it yet, but that's what we would see if this move now has kind of run its course. You watch. Right? We may be getting close here, right, to seeing that ATR shift. So kind of what I'm doing here is I'm anticipating, right, that happening. Again, we're very near to that D level, as I mentioned over here on the left. Take a look at how close we're at to that D level. All right, 79 quarters. So very good potential for the, there it is. Look what's happening right here. Everybody see it? All right, there it is. There's your ATR shift. Bingo. All right, how did I know that? Because I know how the ATR works. I developed it. All right, so I know how the ATR works. All right, there you go. Wow, fantastic morning, right? So a little bit of everything in this for everyone here. Okay, in terms of hopefully some educational ideas, trying to understand some of the, how we use our tools. Okay, and by the way, do yourself a favor and read today's daily trade strategy. All right, the part that I want you to focus on, okay, is the two part focus. All right, this is where I want you to focus. Again, it's free access here for everybody. All right, two pillars of the PTG trade plan. That's section one, and section two is the toolbox matters, but the hand using it matters more. Okay, what that means is you can have the tools. You can have a whole toolbox of tools, real cool tools, power tools, etc. But if you don't know how to use them, it's like a paintbrush, right? A painter, an artist, right? Everybody can use the same paintbrush, but if you don't know how to use it, you're not going to create, you know, a masterpiece. So focus on those two sections of today's trade plan, and you'll get an idea, a really good idea of what we do, how we do things, or and just kind of the, the overall kind of, um, our philosophy, if you will. Philly D asks, does the ATR work in a similar fashion to the opening range? Mm, not really. We do have an opening range strategy, okay? And again, maybe that's something we can look at next next time around. But not, I don't really use the ATR for the opening range. Maybe something to explore, right? But it wasn't designed for the opening range. Um, the core of the ATRs is designed to kind of ebb and flow with the rhythms of the market. And again, one of our core premises is to stay in alignment with the primary floors, right? Again, right up in the first two pillars of the PTG trade plan. Pillar one, okay, stay aligned with the dominant force. I've been noting this since day one, nearly over 13 years now. Okay, and then the second pillar, again, you can read more about it in the daily trade strategy, is trade location, not emotion. So hopefully that will help give you some insight into how PTG does its thing and what we do offer in our community. Right? Obviously, there's an open invitation. Again, my slot here is on Wednesdays, right? And we'll kind of, I gave you a little bit more kind of in depth to what we do, in our room here today, uh, kind of explanation wise. So we'll continue to do, live activity in the market activity, market action. If anybody is interested in learning more deeply, take a deeper dive in a lot of stuff that what we do. Right. Again, there's an open invitation to come in and take a deeper look. Right. A trial. Again, I don't push anybody to take any trials or anything, but if you are interested in wanting to take a deeper dive into what we do and how we do things, uh, again, feel free to contact me. All right. That's fine. But I'm not going to, we're here to kind of, give you kind of a view from different um, angles, right? Different styles of trading, as I mentioned in the beginning, and hopefully it helps. Hopefully it helps. All right. And again, if you haven't taken a Pitbull Trader evaluation, right, I really encourage you to do so. Right. And the reason for that is it's a small price to test out and challenge yourself, okay, to um, to become a more disciplined trader, right, without risking, large amounts of your own personal capital. I kind of view doing evaluations as like buying a call option for 30 days, right? For 30 days, I'll buy a call option. I know what my downside risk is. I can't lose any more than my initial investment, right, with an option. Similar to that, using evaluations, I have a limited risk with a greater upside potential, and test your ideas, right? And again, the idea of using it is not to use an evaluation as, easy come, easy go, rather as a, stepping stone, okay, to something greater that you want to become for yourself. It's a great tool to do that, right? The Pitbull Trader funding program is competitive to what's out there. Some of you may already participating with other funders. That's great, right? If you want to give the guys over at Pitbull Traders Funding a shot, right? Charlene here mentioned right from the beginning he's already passed the eval going into the funded stage, so that's terrific. So think about it. Again, it's a pathway to becoming a better trader. All right. All right. That said, we have hit the time limit here at 11:45, and so I am going to stop our presentation here at this time, and then get some refreshments, relax. Danny with an I will be coming on here soon at noontime, and we're looking forward to her presentation. So stay with us, and hopefully you enjoyed what we put out for you today, and get some educational value. It's always one thing. This thing is I always kind of stress everything that we do, right? Whether you made money or not made money or whatever, you should always walk away with some educational value that the market provided us, right? Always in the learning stage, no matter what, no matter how much experience you have, right? We're always learning something. So take care, everybody, and we will, even though my slot is on Wednesdays, okay, I am available every day. All right, and I may pop in as well, throughout the week going forward into the room. All right, so again, always available. You can reach me, And we'll see you next Wednesday. Have a great 4th. Get some relaxation, put some burgers on the grill, and we'll see you next week.